Hey, how's it going, guys? Welcome back to mentfx. This is going to be the second part of the quote-unquote masterclass after the introduction one we had last video, where we just basically spoke about ultimately what a chart is, why it moves up and down, how you're trading currencies, how they work. If you missed that, you didn't really miss much, especially if you're a trader who's been doing this for a while, or you're just coming back to get back into it, or you are looking for a new way to begin trading. This will be a second somewhat of an introduction video where we're going to look at the three main ways to trade, which is ultimately long and short term, kind of broken up a little bit more. The material that's available to you right now and where you should actually start. And after that, we will talk a little bit about the movement of the market, how it happens, get a little bit into very brief introduction into how we trade and how we're going to be teaching this, and something that you want to avoid, okay? So again, I have this open because I'm going to be talking about this in one of my next institutional analysis order flow videos, and we're going to go top down, and I'm ultimately going to show you how I get to the same endpoint. But right now, the important part is jumping in to the second introductory part of mentfx and what you should be doing, okay? So the first thing that we are going to open up and think about is the three time frames of trading. Okay, now again, during any one of these videos, I advise you take notes throughout my entire 10, 11, 12 years, whatever it's been thus far, of Forex mastery. The only time that I've really started to learn a lot and start to almost introspect about the things I was learning and then apply them was after I began to take notes. Of course, this is going to be introductory. If you know all this and you're just watching it because you want to be part of the mentfx from the beginning till the end, then sure, be my guest. It's no problem. You can just watch it. But if you are very new to this and you don't know any of this, this is going to actually be very helpful down the line, even if you don't think it is going to be now, because I was very similar. And for those that actually are still somewhat intermediate, maybe a little bit more experienced, this could almost help you solidify a strategy or solidify a way of trading and start to give you less losses, which is what a lot of people continue to experience, okay? So the three time frames of trading are these, okay? One is positional trading. Very simple. We have three, okay? One is positional trading, one is swing trading, okay? And the last is intraday trading, which kind of encompasses the idea of scalp trading, but we can add that as a mini bullet point, okay? And we have scalp trading. So again, if you want, pause the video, take notes. I'm going to be going over just things that I think could be important and might come in handy in the future, okay? So if you remember from the last video, we were talking about candles and looking at, let's jump on another chart real quickly so it's empty. We were talking about candles and how every candle represents a certain time frame. Most of you probably know this, but it's good to just to regurgitate the same information sometimes. We're going to jump up to a higher time frame, a daily, like we did during that video. And again, we're looking at each candle now as a representation of one day, okay? So the idea is when you're a trader and you're trading the daily chart or the weekly chart, holding your trades for, the next few candles, aka a few days. So let's say, again, I repeat, I do not trade support resistance. I do not trade trend lines or anything like that, but that is what a lot of people begin to learn from. So it's easy to get some concepts across to them using their ways of learning before we delve significantly deeper into the institutional and smart money side, okay? So we could, for instance, have said that this area right here was some kind of heavy resistance when this one was some real big support, and we saw this I guess head and shoulders hold or whatever you want to call it. We traded off an area coming up to here, creating that little bit of a pullback as a false resistance, and then that breakout within this area to the upside, right? So let's say maybe on a lower time frame, right? So if we just jump down a tiny bit lower, if we find that area real quickly, so it's going to be hard to do right now, I guess. Let's just say it was this area right here, and you had some kind of retouch on a lower time frame that you entered here, okay? Now, the idea is when, let's say you entered inside of here, your stop loss was somewhere here, and you'd be targeting somewhere up here, okay? So even this itself can be considered an intraday trade. But the idea here is you are framing setups and trades off of a daily chart, something that is quote unquote very long term, right? Because just from here to here is already about, this is 2019 of September, this is 2020 of October, so this is almost a year, just right here on this chart, right? So when you're holding a trade like this from the 21st of July 2020 until the 1st of September, that's already 2 months, so it's about a month or two, right? And by that point, you have ultimately created a positional trade. Okay, so a positional trade is usually a trade that is taken off a much higher time frame, taken off, not so not analyzed from the higher time frame to a lower time frame, but taken off that higher time frame with an anticipation of price moving to another area on that higher time frame, right? So the most important part is that you want to take from this is that you are ultimately holding the position for more than a week, actually more than 2 weeks, all the way more than like a month sometimes, right? So that's a positional trade. The idea with positional trades is you'll be trading off the daily, off the weekly, finding areas that you like, right? And you'd be like finding important areas like an order block here, trading off that and holding for a long time until we come into, for instance, another order block, right? Trading from here to here would gain you about 1,345 pips, right? But this movement itself took, as you can see, 784 days. So ultimately, this was a 2-year trade. That would be considered a positional trade. A very long-term trade is what a positional trade is, okay? And the reason as we go through these is very important is that when you start to understand your own personality, you understand how much money you have, or you start to grow your own account, you become more aware of what you are better at, where you excel, and sometimes where your emotions find themselves most calm or most relaxed or most comfortable, okay? So now we're going to jump down to, let's just say, a 4-hour, or we can be on a daily, right? So when we're framing trades on a daily or a 4-hour and we're holding for ultimately about, for maybe a day, maybe a week at most, that's what we consider a swing trade, okay? A swing trade is something that can be week to week, so it can be maybe 2 weeks, 3 weeks at maximum, most likely. But other than that, it's usually a longer term trade that isn't a positional trade, right? So you're starting to see something unfold here, but again, it's usually a trade taken off of a semi-high time frame, looking to hold for about maybe about 2 weeks at max, maybe even a month at max, but ultimately like a week to a few days. Okay, that's what a swing trade ultimately is. The reason we're talking about this isn't that it's going to help you with a quote-unquote strategy, but it's going to help you understand what you're better at doing, right? So short term, you might see that on a 4-hour chart, you start to spot things that almost work every single time, right? Whether you're looking at a breaker block, getting traded off, and then holding, and you're seeing this happen back and forth, and you're back testing, you're seeing it happen over and over again from a, let's say, weekly scenario analysis down to a 4-hour entry, and you can hold it for about, from this area, so the 10th of September of 2020 till about here, the 25th of September. So that's a few weeks right there. That's a swing trade. You are catching the swings in the market, and you are holding for a longer period of time. That's what swing trading is. Now, when you start to understand that's what you're better at, that's what you label yourself at, right? You will be able to start to find out what you're better at and where you find your success in the Forex market, right? There's some people that love scalping. I love scalping, but I also love swing trades, and I love positional trades, and I love intraday trades. How do I use this all together? Well, when you've seen some of my other analysis videos, we go from a monthly positional standpoint, looking at where we would be getting into positional trades if we had that type of money, all the way down to scalp entries into those positional trades or off of key areas, off of important swing trade areas or day trade areas, and things like that, right? We'll get deeper into that later, but that's not important right now. all that's important is that you understand, you know, what these are. So as we continue, it's very easy to see. I don't want to waste your time with this. Intraday trading is when you're holding for a few days to maybe a day. Okay, so this is like intra-week almost, right? Swing trading, intraday. It's daily trading, holding for maybe a few days, maybe a week at max, right? All these definitions can be changed. They're like more pertaining to the user themselves, but these are the four most important things that you kind of want to remember, and scalp trading is just a part of that, and that's, you know, holding trades very, very short term, sometimes minutes, you know, sometimes even seconds if you want to get really deep into it, like algorithmically, potentially. Holding trades very short term, sometimes minutes, sometimes, you know, days, hours. And on rare cases, you might excel these trades if you start to scalp trade from an area that's important to you for potentially days, so on and so forth, right? So the way we trade is we actually find scalp and intraday entries that can lead us to have, you know, that short-term profit, which we are happy with taking in the form of, you know, 3, 5, or more percent, whatever it might be, or less. I'm sorry, I don't want to put a random number out there like that, because I'm not here to boast or anything, or to do anything along those lines. This is more about teaching. And we get into a small trade like that, taking small positions off and letting a bigger trade run, right? For example, if we were looking at this area right here in the form of this order block, and we had price trade up into it, right? On a lower time frame, this could have been an entry for us to scalp, right? And as we enter the scalp, we take some profit right here at already like 1 to 6, whatever it might be on a lower time frame, and we can let the rest run until here to make a 1 to 80 or a much higher trade, right? Otherwise, we get stopped out of break even, and it's unfortunate, but we've already made our profit, right? So you can start to see how these can bounce off each other, and how over time you can almost put them together to create a very good statistical edge in the market and to start making good returns in the market as well. Okay, so those are the 3 time frames of trading, and that's going to be important for your future development, right? As you're doing this, you want to consider your own personality too, because someone who is more kind of ADD, kind of all over the place, might actually prefer to do something like scalp trading. Someone who doesn't want to be waiting around. Other people who are very calm, reserved, have other things going on, whether it's family life, whether it's school, or maybe even a job for some people. If you haven't gotten to a place yet in your own life where you can be trading for a living, or you haven't emotionally got there yet, longer term trades or positional trades might be much better for you, right? Having the ability to go onto a daily chart, for instance, at this point, analyzing this to see that, okay, we finally had some kind of Wyckoff was accumulation here, took off to create a sign of strength that just created some more liquidity, right? Looking for entries off of potentially this order block right here, never get down there, take off above it, look to enter on the re-entry of this break of the automatic rally of a new reaccumulation, and enter that to the top side, right? And you could just be holding it over the next month or 2 months with relatively no problem, because you don't even have to be looking at the chart, right? Other people like me will want to do an analysis all the way down. So for instance, you saw the chart at the beginning of this video. We were looking at this chart right here. This chart is all based off of a very high top-down analysis from a monthly chart all the way down to a 5-minute entry basis, right? So on a 5-minute, we have things we want to do. We have things we're looking for this week. This can happen Monday for all we know, right? And if I'm in the mood, I can be in this market very close, looking at areas of potential redistribution to come lower, to reaccumulate, taking positions that, you know, are 1 to 2, 1 to 3, 1 to 4, in the form of scalp entries, looking for those higher kind of 30-minute areas of interest to be hit, and so we can start to trade around those areas, right? So there are multiple ways we can look at a chart, and there's multiple ways we can conduct analysis, and there's multiple ways we can trade. And I feel like that's a very important thing to understand for those that are new, or those that are even intermediate, because your trading adventure is its own, right? The way you become a successful trader will be your own. You will learn a lot of concepts, you will learn a lot of ways to trade, but eventually you're going to find something that you like the most, and you're going to stick to it and refine it to the point where you understand it in and out. Other people's trading journeys will not matter to you at that point. They will be inspiring to you, but the idea is, the end all be all is that this market is always going to have money in it, that can be made, that can be taken out, right? You're going to have trades that you're going to miss, you're going to have trades that you lose, and you're also going to have trades that you get in perfectly, holding the most beautiful position that ends up making you, 20, 30, 50% on your account, like that. I'm not saying it's going to happen instantly. I'm not saying it's going to happen in a year. I'm saying it's going to happen when the time comes. But the important thing to realize is that your trading journey is your own. You will get somewhere if you put the dedication into it. You have a personality that's unique and is different to everyone else. You also want financial freedom, as does everybody else. You have different ways and ticks about yourself. You have different things you like, and that is all almost reflected in the way you trade and the way you look at a chart. It does not ever have to be the same as other people. You're never missing out. Even if you think you are, the end goal is still going to be the same. You're going to get there if you dedicate yourself, okay? So that's why understanding all this stuff is very important in my book, right? And as we went over in my last video, which you can go and take a look at very quickly, as we know the 3 time frames of trading, there are 2 important ways of trading, right? That is the institutional trading, which is what I do, and you're looking at a lot of different things like what you saw back here, right? And your second way, this is just very quickly a quick recap of my other videos, is algorithmic trading. Okay, and the most important part about all of this, whether you even become a retail trader, which I highly do not recommend, because you don't actually know what's going on most of the time when you are trading retail with support, resistance, and trend lines. You can be successful, but like I said in my other video, you're ultimately doing this on a much lower level. Okay. The most important thing is your risk management. Okay, this is the things you want to focus on. This is the things you want to keep in the back of your mind. You have your 2 ways of trading. You have your new strategy that you create, whatever it might be. You have your concepts that you learn and you start putting together to create something that actually works. And then you have risk management to top it all off. Okay, and the other most important thing I want to bring up, and it's something I go over with my clients often, is that you want to refrain. This is a very crappy photo of a bunny, okay, with his little carrot. Okay, here you go. There's your little bunny. You want to refrain from being this, okay? So refrain from being a bunny, okay? So the idea of a bunny is it's someone in the market who is consistently finding new strategies, seeing them work, seeing them successful in whatever market they're trading, and then all of a sudden having them stop working, losing interest in that strategy, starting to kind of disbelieve in it, and then finding a new one and doing the same thing on repeat, right? That's what a bunny does. You're bunny hopping without learning anything from your previous mistake, right? The idea behind finding a strategy, testing it, not having it work, or having it work short term and then not having it work, is asking yourself why that happened, why you believe that happened, and how can you take the step further, right? The next step isn't, oh, okay, that doesn't work, let me just look for something else, right? Here's the story. I started with binary options, looking at indicators, RSI, looking at all those things that I now disown and do not like at all, right? But the idea is I started with that. And as I started to fail with them, I just kept switching. Different indicators, different gurus, pay more people, different indicators, pay for more indicators, pay for more templates, see a new template, like the template, download the template. The template doesn't work, try a new one, change the parameter, try a new one, non-stop. And it would just be non-stop 6 years of straight changing stuff around, making money here and there, losing money, and then saying, oh, I blame it on myself, I should have gotten a better strategy, and then repeating that process, right? It wasn't until I said, okay, why is this strategy not working? Okay, it might be because of this. Maybe I should go and learn retail. So I went and learned retail. Okay, started to trade retail. Some of it I saw successful, and then I started to see that it really didn't work. Something was happening. Something on the back end. What was happening? I would always ask myself, what is going on? Why is this happening to me? So I researched what I'm doing. Why are those areas not quote unquote holding? Why are these trend lines not holding? Okay, so there's an entity behind the market. There's a composite man. There's something that is controlling everything. If they can see my orders, why would it be that easy? Hold on. If everybody in the trading game can look at any market and go, here's my line, here's my line, here's my line, I'm going to buy here and then sell up here, why wouldn't everyone be doing that, number one? And why would you be successful doing it if some of the most richest people in the world and the wealthiest people in the world, so you can maybe say some of the smartest people in the world, are trading in this exact same market as $5 trillion passes through? Okay, so there's got to be something more than just this. There's got to be a reason as to why it doesn't work. Okay, so there's smart money. So there's smart money. How do I notice that? Okay, you have order blocks. Okay, but every time I try to trade an order block, it still sometimes doesn't work. Okay, why is that? Okay, well, not every order block is an order block. Not every area of mitigation is an area of mitigation for the big banks. Not every area is an important area. Okay, why? How do I start spotting them? Okay, so we have different cycles. We have different areas we can look at. We have ranges. We have structure. And all of a sudden, you begin to build on top of what you know. Instead of disowning a way of learning and going next, you use what you know of that to understand what is happening when price does what it does. And instead of being a bunny, is hopping around from place to place without noticing, the things you've left behind, you want to be doing this while doing this. Okay? The most important part is we're humans, we're not bunnies. We can use our brains. We can go a step further and ask ourselves why. And that's one of the craziest things that you can do when it comes to the Forex market. And over time, you will see that you will become more successful. Because as you start learning concepts that are kind of crazy to you, like when you look at this, I don't know if you even notice anything or understand what's going on. Maybe you see a little bit because of, some areas that I've highlighted. Maybe you are coming from a retail background thinking, oh, this was support or something, this is resistance. When in reality, there's a lot more that's going on. Maybe you do come from a smart money concept background and you understand what's going on here, but in your own trading, you tend not to be able to spot things like this, or you end up being wrong about them, right? You want to refrain from being a bunny hopper and going from strategy to strategy, and instead focus on understanding, focus on the learning process. You will get far, and it won't take you long. It's taken a lot of people that have become successful long, but it's also taken some of my clients a short amount of time, because first of all, they had me explaining to them a lot of this stuff, but also they were able to dedicate themselves specifically to a way of learning and to building upon that. So eventually they got to a point where they could look at any market from the top down and actually get an idea about where it's going to go and where they can get entries. And when those entries fail, they don't just move on to the next. They go a little bit deeper and try to understand why, right? If this entry here, for instance, fails, I already understand why. And I already understand what my next bias and my next move would be, right? It's because I've built an understanding about what's going on. And you can do the same, okay? What you need to do is you have to understand who you are as a person. You have to choose one of these ways of trading and pursue it for a little bit, see where you are. Or of course, take a class and build upon that knowledge quicker. But again, I'm going to be releasing videos back and forth, back to back. And like I said, we haven't jumped into any of the in-depth and important stuff yet, because we need to get the intro and important quote unquote psychology stuff out of the way, okay? Because as regurgitated as it is one of the most important things, and it's going to be the thing that leads you to your financial freedom. And it's the thing that's going to stop you from making mistakes like I did, like this, okay? So just making sure that this is all I want to talk about. Okay, so since we spoke about the 3 ways to trade and bunny hopping and not wanting to do that, institutional trading, algorithmic trading, and most importantly risk management, we're going to touch quickly upon why these markets actually move as a little hidden gem in this video for the end of it. Of course, we'll go over this in a future video because it is an important topic, and for people that don't end up watching it, they won't hear it, but right now, here it is, and here's something you can start to think about, right? I've spoken about this in some of my other videos, but since this is the series I'm making, this is where I'm going to bring it up, okay? So let's jump on a normal chart, and again, I'm going to ask you the same question I asked in our last class, right? Or I answered but didn't get deep into it, right? Why does this market move? Why do these things go up and down? Why do these candles move? Why is price constantly fluctuating? Okay, the answer, as we've said, is because of the supply and demand within the market, right? You have a bunch of retail people trading, you have institutions trading, you have hedge funds trading, you have governments intervening, you have countries, you have companies and wealthy individuals that are hedging their own positions. You have people taking in and out. You have tourists that are traveling. Any time that any money can be exchanged, it is all reflected within this, okay? It's the up and down process. Now, the interesting thing that I want to kind of build upon you're understanding right now is something that might be hard to understand, but it's a good starting point. We're gonna touch on the idea of liquidity, which we will get into the next video, because that's a very deep concept, and I can go for days about it. But the idea is, when the market moves, and it moves substantially sometimes, right? You've most likely seen crazy moves. Sometimes it's news, whatever you want to call it. It is a result of some bigger entity, or in some cases, if you don't believe in that smart money stuff, which I don't understand why you wouldn't, but let's say you don't for a second, then that means that a lot of people are piling into the market, right? So therefore, it's moving very quickly. Now, just for a second, imagine you are playing against the world. Let's say you just won the lottery. You have a few trillions of dollars, gazillions of dollars. I don't even know what goes after trillion, but you have more money than any country, any king, any emperor that has ever lived on this earth, okay? And you want to make more, right? And your way of making more is honestly just looking at this market, because it's the easiest thing you have to do, right? If you have all the money, okay, and you have a lot of people, so let's say you look at this market, you have, the market's right here, okay? The market's right here. You have all the money in the world, okay? And people, retail traders, sold at this resistance, which, this resistance that became support, retail sold right here, okay? Let's say this is all you know right now. Retail sold right here. You see their orders sitting here, right? There's not just you and your friend Billy and your guru that just sent you this trade that have been trading this, right? There's also 1,000, or sorry, not 1,000. There's millions of other people taking sells in this area. Okay, there's also people taking buys and they're losing, but there's also a ton of people taking sells in and out throughout this whole area. Okay, so as the person behind the scenes with the most money, let's say you sell into this position. Okay, what that means is you've used those trillions, gazillions of dollars, because you have more than an emperor that has ever lived on this earth, and you have more than any other person, so you can control the market. You just sold heavily. What's going to happen to every single retail trader out there? The people that got in here are ecstatic, looking for lower prices down here. Okay? The people that missed this trade are trying to get in where? At this newly formed, what are you going to call it, resistance. And the people that are gullible and have FOMO coming in and they're just dying to get into this market from up here and they've just missed their chance, are piling into more trades here, just hoping it drops the same way it has dropped. Everyone's seeing this downtrend now. The trend line is starting to form. Everybody wants to get a piece of the pie. And at this point, since you know that there are tons of orders, tons of people that sold here, that people that are selling here, people that are selling up here, people that some have stop losses here, some people that don't even have stop losses, right? What's your next move going to be? How are you, as the person with the most money in this market, going to make money? Well, you can't just move the market for no reason. You need a reason to move the market. Okay? So ask yourself, why would I move the market and where would I move it? Well, if everybody in their right mind is selling, and they have stop losses here, they have stop losses here, they have stop losses here, a stop loss here, stop losses here. Some people that sold all the way down here with stop losses here that are tight, some stop losses here. People that want to enter in and around here with stop losses here. So these are all stop losses now, right? And this is going to be future stop losses of people that enter. And each one of these represent maybe, let's say 10,000, even 100,000 transactions, because it's not just one person that's getting in. There's tons of people getting in. So if you know all this money is resting here, how's the money resting there? Well, there's stop losses. That's money. When you lose a trade, that money goes to another party, right? Who's that other party? It doesn't have to be smart money. I don't care. If you don't believe in the smart money thing, think about it as someone who has more money. That's all you have to think about it as. Who's that money going to? The person on the other end. So if you are that person on the other end that has all that money, the gazillions of dollars, that's more than a king, more than an emperor, where are you going to move price? Well, you're going to want to move it into this area, creating what? Maybe another area of retracement. Why? Because the second you create like this, what does this become for all retail traders? A trend line. So what happens? Well, now you have more people getting in with stop losses where? Right here, and more stop losses here, and each one of these again representing millions of trades. So what are you going to do next? Well, if you continue down, all these people are going to be in profit. Or you could go like this and take them all out, taking all their money, right? Creating a new potential fake high, making more people get in before you go even higher, right? And by this same sort, what happens when this happens right here? Retail begins to see this right here, a trend line, so they start entering buys, and by that point, what is it? It's too late, and this happens. And that's why your trend lines and support and resistance lines usually get blown through like it's nothing. Like as if something that should have held doesn't get held. Okay, so let's see what price does. Of course, we've seen it, but if you're this person, why wouldn't you buy right now? Check this out. We create more resistance. People are getting in. Look what they see here. What is this for a retail trader? This is now newly formed resistance. There are even more of these lines above here now. Everybody in their right mind might be selling. Some are buying. Don't get me wrong. Some are buying. Some are seeing a buy opportunity here, right? With something else they might have noticed. But most people are selling. So what are we going to do with all our money? Well, right, look at this. This makes it look like we're going down again, and then look what happens. We blow through it with no problem. Why? Because we created all this area here for people to want to get in and think it's going to go lower. Huge engulfing candle. People want to get in, and we come and blow them all out, okay? So the reason that I wanted to show you this is to add on to the idea of why price is moving. Price is moving because there are orders that are sitting in certain areas, okay? That's the idea of liquidity, which we will get into in most likely our next video. But since we're moving to those areas of liquidity, that's where orders are. Price wants to move to orders, which brings me to the idea, the question that we asked, why does price move? Because price wants to fill in and grab orders on the other side of the market. And that is why you have this up down. You have this up down because of supply and demand, because of all the people interested in the market, but you also have the up down because there's some entity on the back end of it, even if you don't believe in it, that is going to come and take your orders, which is why you'll oftentimes see easy patterns like this get stopped out. So again, do not bunny hop. Learn from your mistakes. How are you going to learn from your mistakes? Start noticing why things like this do not hold. Start noticing that, right? You see how quickly we blew through all this, right? It was no problem. And now we're here. Okay? We blew through all these areas without an issue, creating what? What appears to be a new area of resistance. So what can you most likely expect for Monday? Well, you're probably going to see some kind of move down and then a blow through. Or you're going to see a move all the way down and blow through. Or you're just going to see a blow through and then blow back down as people try to buy this, right? There are multiple ways you can see this, and these concepts are going to become more apparent, and we're going to get much more in depth as time goes on. But right now, I wanted to introduce this concept to you so you have an idea of what you should be expecting and looking for in a market, okay? So I hope this was a second better introductory course, and I hope this last part makes you think. I hope you open a chart, maybe go into a replay tool, maybe just start backtesting like this, and start looking at areas you would have bought and sold based on the knowledge that you understand right now. And then ask yourself why it didn't happen. Then come back and watch one of my videos. All right, thank you for watching, guys. This is mentfx. This was the second episode. I look forward to you guys in the third one. Peace.